Bitcoin has hit yet another all-time high. If you're holding Bitcoin right now, you're probably feeling pretty good. But with all this excitement, what's next? In today's video, we're going to explore why it might be wise to consider taking some of those profits and reallocating them into something a bit more traditional, like gold and silver. First, let's talk about how Bitcoin got to where it is today. Over the past few years, Bitcoin has skyrocketed in value, and recent all-time highs are a result of a few key factors. We're seeing massive institutional investment, more companies adopting Bitcoin, and a global economy that's, well, let's just say, unpredictable. All of this has pushed Bitcoin to new heights. But while Bitcoin's gains are impressive, it's also one of the most volatile assets you can hold. Just because it's at an all-time high now doesn't mean it'll stay there. This kind of volatility can be risky, especially if you're putting all your investment eggs in one basket. Now let's talk diversification. If you're an investor, you've probably heard this word a lot. But why is it so important? Diversification helps spread risk. Instead of putting everything into one asset, you spread your investments across multiple types of assets. This way, if one takes a hit, others might balance it out. Especially with something as volatile as Bitcoin, diversification isn't just smart, it's essential. And that's where traditional assets like gold and silver come into play. All right, let's do a quick comparison. What do Bitcoin, gold, and silver each bring to the table? How are they similar, and where do they differ? First, liquidity. Bitcoin is very liquid, but because of its volatility, selling at the right time can be tricky. Gold and silver are also liquid, and their prices are less likely to experience extreme swings overnight. Then there's stability. Gold and silver have decades, even centuries of price stability. Bitcoin? It's got about a decade of data and a whole lot of volatility. And while Bitcoin has a fixed supply, only 21 million will ever exist, gold and silver are finite too. They're mined regularly, which means there's a constant, albeit limited, supply. These assets complement each other in a portfolio. So why should you consider reallocating some of your Bitcoin profits into gold and silver? First off, profit protection. Bitcoin's price may be high now, but if history is any guide, that doesn't mean it won't experience corrections. By moving some profits into gold or silver, you're locking in gains with a more stable asset. Then, there's risk management. Diversifying into gold and silver helps reduce exposure to Bitcoin's extreme highs and lows. Even if Bitcoin dips, your wealth remains more balanced. Also, a hedge against market corrections. Bitcoin's recent highs could mean it's due for a pullback. By reallocating, you're ready for that possibility. So if you're a Bitcoin investor interested in adding gold and silver, how do you actually get started? You have a few choices. You could invest in physical gold and silver, like coins or bars. There are also gold and silver ETFs, exchange-traded funds, or even mining stocks. Each has its own pros and cons, so consider what aligns with your investment style. And remember, balance is key. Don't over-diversify, but find a mix that suits your goals and comfort with risk. To sum it up, Bitcoin has hit incredible highs, and if you're invested, that's fantastic news. But with great gains comes a chance to think about protecting those profits. Gold and silver offer stability, a hedge against volatility, and a way to diversify your portfolio in uncertain times. So, whether you're a long-term Bitcoin believer or just riding the current wave, consider adding a bit of old-school security to your new-school gains. If you enjoyed this video and want more insights on investing, cryptocurrencies, and portfolio management, don't forget to hit that like button and subscribe. Thanks for watching, and happy investing.